Hey guys, Akil Stokes here of Tier 1 Trading, and I want to spend a few minutes with you showing you a different type of candlestick chart that I use to take advantage of opportunities in the market. Now, I promise this is going to be a short video because, well, in about 10 minutes or so, Elon Musk is going to launch a Tesla into outer space, and this guy wants to see it. But if you haven't noticed, recently there's been a massive amount of volatility in the market, and well, volatility is kind of like a double-edged sword. It can be both good or bad. Think of it as being like a very fast car. For someone that isn't really skilled at driving and can't really handle that speed, it may be a death sentence to you. However, to the professional, one that's accustomed to driving that car at that type of speed, you can also have the ride of your life. And that's what we're seeing in the markets right now. If you've been looking around, no doubt you've seen some very big moves happen in a very short period of time. And often when that happens, it looks as if there's no chance to take advantage of them. That's where the range bar charts come in handy. With the range bar charts, it provides you a different look at price action. I like to call it a more in-depth look at price action, and it allows you to see opportunities that you may have not seen otherwise. And what I want to share with you today is a short clip from our live trading room where I explain to the traders the difference between range bar charts and candlestick charts and how I use them to take advantage of trading opportunities in the market. Darren says maybe one day we can do some training on the range bar chart. Sure, but again, yeah, Darren, it's no different than how I trade the regular charts. We can certainly do some training on it, but understand there's nothing different that I do in the range bars than I do in the regular charts. I treat all charts the same. Does that make sense, guys? So the analysis that I do on the daily chart is the exact same analysis that can be used on the 5-minute chart, exact same analysis that can be used on the range bar chart. So I don't mind doing a Q&A session on it at all. But I don't want you guys being under the impression that the range bar charts are in some way a different technique or style. It's the same exact thing. I'm looking for pullbacks. Extensions and pullbacks. Why do you look at them then? Because they give me a different view on price, right? The range bars move differently. So time-based charts are based off of time. So like a 5-minute chart, you have a candlestick close every 5 minutes. Because of that, you often get some very, very long candles if the price moves a lot within 5 minutes, or you get some candles that pull back like this right here, and you get a big wick. So here's a perfect example. If we were to look at this candlestick right here, you see this, you can call this a pin bar at the time. You see this candlestick right here? This was at 5:15. I hope I can find it, right? Does this look like anything to you? Anything of relevance, or would you just be like, whatever? Stupid wick, right? Probably nothing you can do on that candle. On a range bar chart, and I hope I can see it, right? Because we're in a bearish trend, we'll probably see something like this. A move down, which was the wick, right? A retracement back up, which was the close, and then a continuation down, which was the next series of candles. Does that make sense? So this candle right here on a range bar chart will probably look like this. Because on the range bar charts, it's not time-based, it's movement-based. So it just gives you a different view in the markets. Does that make sense, guys? This candle on a lower time frame on a range bar chart will look like this, right? Because think about it. What did this candle do? It shot down, it shot back up, and then the candles after that continued down. So let's see if we can find it. This was 5:15 this morning. So hopefully I don't keep a lot of range bar data up, but look at that. Let's go back to 5:15 this morning. All right, here we go. So here's our move, right? Look at that. On the minute-based chart, could you see any of this? Probably not. Range bar chart, what is this right here? New structure low, outside return, And we have the condition that I wanted to see, right? What did the market do? We went directly from oversold to overbought. Lower low, lower close. Entry right here. Stops above highs. Targets, retest the structure. Extension down. Boom. I'm so glad that actually worked out. I knew it would. I knew it would. I spent far too many years staring at charts. But that's seriously though, that's why I like the range bar charts, because it gives you a different view. So this entire move, right? That candle on the chart was one 15-minute candle. You can see that this move right here, and I don't know, this is for something. The move started down, right? So we had one candle printed at 459. The next candle was 501, and then 503, and then 508, and then 509, and then 510, then 511, 512, 513, right? 17, 19. So all of this happened, right? This entire move happened between 454 in about an hour span. But instead of just having 4 candles on the 15 or 1 candle on the hourly, you can kind of see the moves within the moves, because when a range bar is printed off of a range, so each time price moves in a range of 5 or out of a range of 5, that's when a new candle prints. And it would be the same thing if you were using like a 10 range would be ranges of 10. So the price movement isn't based off of time, it's based off of what price is actually doing. And it just gives you a different view. Sometimes it'll look exactly the same as like the 5-minute chart. Sometimes it won't. So a good example right here, right? This is going to be a trend continuation opportunity, although we haven't, you want to be careful with this because we haven't broken our previous structure lows right down here. But it looks as if we're getting a complex pullback, right? Price action created a new structure low right here from our previous low. Again, we have that low in the past we want to pay attention to. But it looks like we may get a complex pullback. So price may be doing something like this, where boom, AB equals CD pattern, right? That will complete right up here. We can bring a Fibonacci extension on, swing low to swing high, and back. Swing low to swing high, back up. You get a 1618 Fibonacci retrace extension, Fibonacci retracement from this swing high to this swing low. Not going to be a lot of confluence. We'll get a 707. I don't really use it too much, but there's going to be a fib in there. It doesn't really mean much to me, so I won't even bring it in. But we can start looking for selling opportunities up here as well as a complex pullback. And this type of move, we're seeing it on the range bar chart. I'll take a look. We may not be seeing the same thing on a minute chart. So on the 15, we don't see it. On the 5-minute, we may. You see on the 5-minute, we don't see it as either. So it's just a different view. Just a different view. So I hope you guys enjoyed that video. Of course, if you want to learn more, head over to www.tier1trading.com. We have tons of education. We have the best community of traders in the world. And I look forward to working with you in the future, whether it's over there or here on YouTube. Until next time, plan your trade, trade your plan. Good luck in the markets.